Credit cards have a bad reputation. Many people associate them with being in debt, paying off high amounts of interest every single month, and seeing their financials spiraling out of control. While it's true that credit cards can be risky if it's used irresponsibly, they can also be a great financial tool that offers us a range of benefits. The key word here is that credit cards are merely a tool. Whether you have a good or bad experience with them is completely up to you. So today, I'll be talking about why credit cards are such an important financial tool for all of us and how you can use it responsibly so you don't fall into the trap.
Cha-ching.
The first benefit of a credit card is that they are extremely convenient to bring around and pay for stuff with compared to stuff like cash. With the launch of Apple Pay in Malaysia, it has gotten even more convenient. Previously, I never really had that much cash left in my wallet because I usually use my credit card for purchases, but with Apple Pay, I don't really pull my wallet out of my back pocket anymore. I know we can also say the same about debit cards and e-wallets who are just as convenient as credit cards as a form of payment. One added benefit of credit cards compared to the other two payment options is that it can help you in times of emergency. Let's say you're the type of person who doesn't really like having a lot of cash in your bank account, instead putting a lot of your excess cash into stuff like fixed deposits, amanah saham, or money market funds. That's a good thing because it can help you prevent overspending, and of course you're earning some money on your idle cash. However, if all of a sudden you need to make a large payment because of an emergency, withdrawing your money from these platforms can still take some time. With a credit card, you can immediately make that payment first while waiting for your withdrawal to process and using that cash to then pay your credit card statement at the end of the month. Of course, this shouldn't be built into a habit where you start spending cash that you don't have, but this is a great tool for those of you who like having very little amount of cash in your bank accounts. The next benefit of owning and using a credit card is something that debit cards and e-wallets cannot provide you, which is to build a credit score. This is especially true for those of you who are fresh grads and maybe don't have a credit score yet, or those of you who are trying to rebuild a previously poor credit score. And having a good credit score is important because it gives you access to loans. And no, loans are not a bad thing either. We made a whole video about that. Just like credit cards, they are merely a tool that can be used for both good and bad. Eventually, nearly all of us will have to take out loans at some point in our lives anyway to buy stuff like, a house, a car, or a Lamborghini. On top of just getting access to loans, having a good credit score could also help you get lower interest rates because banks know that you're more likely to pay your loan off. This could be just a small percentage amount, but over the long run, the savings that you can generate from having a lower interest rate can really start to snowball. Finally, not all of you may know this, but some companies actually do check your credit score as part of their background checks during your application process. Maybe some companies don't find it so important, but some of them, especially depending on your role and your industry, could use it to impact their assumptions about your character, your judgment, and your professionalism. If you're not interested in the previous 2 points mentioned, then cashback and rewards should be a good enough reason for you to own a credit card. Many credit cards out there on the market right now offer these cashback and rewards to sort of entice customers to use their bank's credit card. For example, my Maybank Amex card gives me 5% cashback on all spend on the weekend, which gets me usually a couple of $100 every single year. And these are actually sustainable rewards that should continue over the mid to long term compared to previously where we saw a lot of incentives from e-wallets to try and attract customers to sign up for their platform. If you're not a cashback kind of person, then you can opt for credit cards that give you points instead, where you can then use it to redeem, free flight tickets, upgrades on your flights, a Dyson hairdryer maybe, and many more. Some of the higher end cards also give you access to perks like, VIP lounges at airports and access to golf clubs. Fun fact, every single one of us is actually funding the cost of credit cards whether we use it or not. This is because banks and payment processors charge something called the merchant discount rate, or MDR, to every single business who accepts credit cards as a payment method. So every time you swipe your card, a portion of the amount goes to the banks as a fee that the merchant will have to pay. Because this is a cost to the business, they will have to eventually pass it on to the end consumer. And because of laws in Malaysia and many other countries worldwide, businesses cannot charge a higher amount to someone just because they use a credit card. So what do they do instead? They increase the price generally, which means everyone will have to pay that small extra percentage that credit cards cost to businesses. Since we are already indirectly paying this cost, why not use a credit card that gives us cash back just to get sort of our fair share back? So those are the benefits of credit cards and why nearly all of you should have one. But as I mentioned earlier in this video, credit cards can also be bad for you. The horror stories you hear about credit cards usually stem from the fact that people spend more than they can afford, which leads to high interest and long repayment terms. Credit cards are known for having notoriously high interest rates. For example, I'm pretty sure some of my older credit cards that I signed agreements on had interest rates of up to 18% per year, which is far higher than many other loans out there. So the secret to avoiding this is pretty simple. Spend within your means and make sure you pay off your credit card every single month. I've had a credit card ever since I started working, and thankfully I haven't had to miss a payment so far. If you can do this, it's almost a no-brainer for you to get a credit card. For those of you who are new to credit cards and maybe are a bit confused as to how they work, let me show you how you read a credit card statement. Regardless of which bank you use, you will probably see a statement like this when you log on to your mobile banking app or its web browser. Your credit limit is essentially how much you're able to spend on your credit card before you'll have to make payment. You'd never really want to go close to that number because A, that means you're spending kind of a lot, and B, I have heard that spending a lot or very close to your credit limit can negatively impact your credit score. Your statement date is the date that your bank uses to sort of say, hey, this is the cutoff point for the month and this date should be the same every single month. So if your statement date in January is 28th Jan, then in February it should also be the 28th of February. In this example here, you can see that my statement date is 28th of January, which means the bank has summed all of my transactions from 29th of December until 28th of January. The payment due date lets me know when I have to make payment by, and it's usually 2 to 3 weeks after my statement date. It's important that you make your payment before this due date because if you don't, that's when the interest will start racking up. Some people like to wait until the very last minute to make the payments, but personally, I usually pay off my credit cards as soon as the statement comes in just to be safe. I also set reminders on my iPhone to remind me to make my payments every single month just because I have a few different credit cards with different statement dates, and so I never miss a payment. Then you have the three numbers at the bottom, which is your minimum payment, your statement balance, and your outstanding amount. The minimum payment is basically how much you must pay for that month to prevent them calling you and chasing you for repayment. The statement amount is, like I said earlier, the summation of all your transactions for that particular period and how much you'll have to pay the bank. Finally, the outstanding balance is just how much you owe the bank versus how much you already paid for that month and then how much you've spent in the following month. That's a lot of gibberish, and yes, it could be a bit confusing, so let me tell you exactly how much you should pay and when. To me, the most important thing that you have to look at is the statement balance, and as long as you pay that amount off on time, you should have no issues with credit cards. One thing to note is that that amount won't go to zero even after you pay because that is your statement and it's meant for record keeping purposes. On the other hand, you will see your outstanding amount go down instead, which is why you can see in this example, my statement balance is 1,612 ringgit. I've made payments to it and now my outstanding balance is only 41 ringgit. For minimum payment, I highly discourage you from making this amount of payment only monthly, and I recommend actually that you just completely ignore it. You could have, for example, a statement balance of 1,000 ringgit for the month and a minimum payment of just 50 ringgit. Some people may think that, oh, as long as I pay 50 ringgit, I'm fine because it's a minimum payment, right? The thing is, the remaining 950 ringgit that you did not pay will now start accruing interest, and like I said, it can be quite high of up to 18, even 20% a year. So to summarize, just pay off your statement balance before your due date, preferably right after your statement date, and you should be fine. So, if you're now sold on why you should own a credit card and you understand how to use it responsibly, then you can sign up for one now using our link down below. It will really help the channel. Also, banks have gotten pretty aggressive when it comes to acquiring new customers for their credit cards, so you could get rewards like 1,000 ringgit vouchers or AirPods. Let us know down in the comments below, what is your favorite credit card so far? We're also planning to make a video just about this in about a month's time, so if you haven't already, subscribe to our channel and turn on notifications so you can get updated when that video comes out. Thanks for watching this video to the end guys, give us a huge thumbs up if you enjoyed this video. See you guys in the next one. Peace out.